Welcome back, everyone, to NYU Grad's Daily Podcast. It is Wednesday, December 6th, and today is actually episode 99. Now, 99 is a lucky number in many cultures. It's also considered an angel number. So, in the Chinese culture, the number 99 is very popular because the pronunciation of the number nine, I believe it's Jiu, it sounds like the word for everlasting. So when you have these lucky numbers and you repeat them, like 9 becomes 99 or 999, it just extenuates or emphasizes the meaning of the base number. So, welcome back. Thank you again. I still cannot believe this is the 99th podcast. It means the world to me that all the subscribers are on board. We just surpassed 1,800, and I've had a ton of new pledgers since the month of November. So, thank you sincerely, sincerely. Um, so let's jump right into the day. We had 394 new highs, and we're still outpacing new lows, which is good. We had 156 new lows, so a little bit over 2x to the positive side, which is good news. We had 43% of shares advancing versus 51% of shares declining, and we're sitting pretty with 26% of shares below its 50-day moving average and 43% below its 200-day moving average. I say we're sitting pretty because these percentages were horrible before November, before that rally. The complexion of the day, we opened up and we kind of just flopped around even through lunchtime. Usually lunchtime you see some buying, but we just were kind of flatlined through the midday, and right around 3 o'clock, I don't know if there was a news flow, but for whatever reason I was watching the NYSE up down volume, and it started to tank. Not tank, but it started to drift lower, and then right around 3:30 into 3:45 it started to accelerate, and into the close we had a decent sell-off, and we closed near the bottom of the day. The Dow was down 70 points or 0.19%. The Nasdaq was down 83 points or just a little bit over half a percent, and the S&P 500 was down 17 points, down 0.39%. When you take a look at the sectors, the utilities led the day, up 1.25%, and energy and technology led to the downside. So that's never good. Couple other things that kind of stuck out to me during the day. Um, Outside of Tesla closing up 0.27%, the Magnificent Seven all closed red. That's a little bit of a bad sign, but they weren't down too bad. Um, Gold is taking a breather. My question here is, will 2000 gold hold? Will that become support to hopefully for the gold bugs launch and make new highs? That's really what I'm watching out for. I have no position in gold. Um, the 10-year intraday was trying its hardest to stop falling, but when you take a look at the long-term chart of the 10-year yield, I'll post it on the show notes. It's really the inverse relationship of the markets. We had a massive rally in the 10-year from, like, I would say June through end of August. And once it rolled over, obviously as the 10-year rose, the market started to tank. And then as the 10-year rolled over, and now it has gone down tremendously, almost 100 basis points from 5% to 4.1, we've had this unbelievable, almost record-setting November. And the 10-year yield is now approaching its 200-day moving average. Um, in the past, this area has offered support, not to the penny, but it has created a new zone or balance area. We shall see, right? Like, there's important jobs data coming out Thursday morning, and as sick as it sounds, if the jobs data looks like you and I are all prospering and we're getting good jobs and we're getting more pay, that's negative. That's going to be seen as, oh, Jerome Powell needs to raise rates again. He's not done fighting inflation. If the jobs number is horrible, like, oh my God, there's an increase in unemployment, people are filing for unemployment, permanent unemployment is rising, all of those bad headlines is going to be seen as good, as, oh, Powell has done his job and he can now, put uh, the car in cruise control or possibly even start cutting next year, as a lot of the pundits are saying, like, we're going to be due for 4 to 6 rate cuts in 2024. So everything is still very dependent on yields and how news flow reacts to potential yield increases, pauses, and declines. When you take a look at oil, oil is approaching a very key horizontal support line here around 63. Um, let's see if this holds, but oil is kind of weak right now. And my question there is oil telegraphing a recession and peak demand being in our rearview mirrors for 2024? So watch oil as well. Another thing that just was baffling to me, I really want to listen to the earnings call for K. Hovnanian, the home builder, one of the largest. They were up like 11-12% intraday. They closed the day up 9%. Um, and this is all in sentiment, I believe, of lower yields and lower mortgage rates, and hoping that they can continue selling these new homes that they have a boatload of inventory that they're building, whether they're going to sell it one by one, lot by lot, whether they're going to try to sell it in bulk to private equity on Wall Street, or they're just going to release them for available for rent. I'm not sure, but I find it very hard to believe that unless interest rates do go down to yields go down to like 4.5, 4%, the mortgage rates come back down to like 4%, 5%. I just don't see how all these new homes that are coming online next year are going to be sold for a good profit margin. Um, let's see. I'm going to go through rapid fire what was strong and what was weak, just to give you a sampling, and then we'll wrap it up. So on the strong side, you had, as I mentioned, K. Hovnanian, ticker symbol HOV, up 9.79%. Sweet Green, salads, I love them, up 7.8%, but keep in mind they're down pretty big from the summer, but they closed up today. Delta Airlines closed up 3.5%. I have to do a little bit more digging there, but it could be with sympathy with lower oil prices. Zoom video conferencing up 3.23%. Uber up 3%. Cake, which is Cheesecake Factory, up almost 3%. You had PayPal up 2.78%. Lennar, another home builder, up 2.63%. Zillow Group up 2.2%. DR Horton, another home builder, up 2.2%. VinFast Autos up 2.19%, and Beazer Homes up 2%. A lot of home building stocks, as you can see. What was weak? MongoDB down 10.66%. Shopify down 4.79%. Wayfair, the e-tailer for home goods and furniture, down 4.6%. USO, which is oil ETF, down 4.17%. Ally Financial, down 4.09%. ARM Holdings, um, the chip IPO from SoftBank, down 3.98%. Coinbase, down 3.97%, but that has been on a tear of recently, so maybe it's just pulling back. Birkenstocks Sandals, down 3.79%. Carvana, down 3.5%. And AI, down 2.96%. What to watch? I mentioned the jobless claim data coming out Thursday morning before the open. Keep watching the Magnificent Seven. Keep watching yields and the breadth numbers as well. Right now, there's nothing to worry about on breadth. We seem to be outpacing and favoring new highs. If that changes, I will let you all know. Have a great evening. Thank you again. You humble me with all the new subscribers coming in. I will continue to work hard, and I'm looking forward to once we cross that 3,000 subscriber threshold so I can start to release the premium services on the Substack. Have a great evening or day if you're listening to this on Thursday morning, and I'll see you after the Thursday session. All right, bye.